Hello, and thank you for joining us. It was the second straight day of dramatic losses on Wall Street. A sea of red for the Dow, which fell more than 2,000 points on Friday, or 5.5%. Remember, Thursday it fell more than 1,600 points. Wall Street saw losses across the board, with both the Nasdaq and S&P 500 falling nearly 6%. One big factor is China. It announced Friday it would impose 34% retaliatory tariffs on American goods in response to President Trump's tariffs plan. That means U.S.-made goods will get more expensive for Chinese customers starting April 10th. So what does the U.S. send to China? Well, some of the top exports include seeds and grain like soybeans and corn, semiconductors and other components for electronics, oil and gas, and pharmaceuticals. President Trump responded to China's retaliatory tariffs in a post on Truth Social saying, quote, China played it wrong. They panicked, the one thing they cannot afford to do. Federal Reserve Chairman Jerome Powell gave his assessment of the economy and recent tariffs announcement during a conference in Virginia.
While uncertainty remains elevated, it is now becoming clear that tariff increases will be significantly larger than expected. And the same is likely to be true of the economic effects, which will include higher inflation and slower growth. The size and duration of these effects remains uncertain.
CBS News MoneyWatch correspondent Kelly O'Grady joins us now. Kelly, can you put into context how big these losses are?
Couple of fast facts for you. The Dow has lost over 2,000 points, now only 4 times in history. Today was the 4th day.
Wow.
We have not seen stocks have these big losses over a 2-day period since the beginning of COVID. And we wiped out nearly a year's worth of gains in the past few weeks. Okay, so those are really, really big numbers. Obviously, the market is not the economy, and investors are very concerned about the what if, not necessarily the actual hard data right now, but today was significant.
Hard data, 228,000 jobs added last month, above expectations, normally something that would help the markets. What's contributing to the dramatic fall?
So, right, we got good economic data today. I actually expected to see the market have a little bit of a bounce back, but you mentioned that China slapped retaliatory tariffs on U.S. goods overnight, and that, as you explained, makes it more expensive for Chinese citizens to buy goods from America. So it's going to hurt some American companies, some industries. I mean, realistically, we do buy more goods from China, than they do from us. What this signaled to investors, though, was just this bigger thing that China is willing to fight, is willing to start a trade war, and perhaps other countries could even ally with China, right? And then you have a global trade war. So I think the fear of the what if, not the what, was what drove this today.
These leaders aren't necessarily picking up the phone and saying, we're so sorry, what can we do? But rather, no, we'll see your tariff and we'll check you. So California Governor Gavin Newsom trying something new. He's trying to shield his state from these retaliatory tariffs, said Friday. He's going to be pursuing trading relations globally with partners and try and get those countries to exclude California from their retaliatory tariffs. Can you explain how this would work?
It really wouldn't. So I actually went into the Constitution. I put my nerd helmet on. And Article 1, Section 8 of the Constitution says Congress has the power to essentially impose tariffs, but all duties shall be uniform throughout the United States, right? California is part of the United States. And then in Section 10, it says it specifically bars states from entering into treaties, alliances with foreign nations. So that would bar Governor Newsom from having California have any kind of official treaty with some of these different nations in order to get rid of these tariffs. What he could do, though, is go to China, go to these other places, and work with the businesses and say, hey, can you give us a break? Can you lower your prices? Because we're going to continue. Cali. Exactly. So there could be some workaround, but legally that would be very difficult to do.
Okay, let's talk about the significance of Jerome Powell today. When he speaks, people listen. What was the significance of his comments?
Hearing him say, finally, that inflation caused by tariffs could be persistent rather than just temporary, could be. He didn't say will be. He's always been very measured in the past. And I think when investors heard that, it just means, wow, You think that there could be high inflation, low unemployment, high unemployment that could lead to stagflation. You and I have talked about that before, and that was concerning.
All right, real quick, JP Morgan, Barclays, BofA Global Research, Deutsche Bank, and more have warned the U.S. faces a higher risk of a recession as a result of these policies now. How big of a deal is that?
So it's not a good deal, okay? It's not a good sign, but that doesn't mean that's actually going to happen. Again, they are focusing on the what if, not the what. And the economic data isn't there yet.
Okay, Kelly O'Grady, thank you.